Hi, good morning, good day, wherever you are. Welcome to our global series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market swing, maybe 1 or 2 questions from your side live in our webinar. Our goal is quick and smart like every day. Today it's Monday, 3rd of December 2018. Welcome to Admiral Markets, and we will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you are in the European Union, of course, you will find also information about the topic of the year for all CFD traders. It's the different offers and options for retail clients and professional clients. Or a picture shows more than 1,000 words. Margin requirements could be quite different. 2 prominent examples, DAX 30 or also Euro dollar. Like you can see, the margin requirement is quite different if you're a retail client or a professional client. If you're a professional trader and you like to get the professional client status, if you're eligible, you can apply for that online. Retail clients still have a big benefit. It's called unlimited protection against negative balances. Professional clients don't get it via regulation, but some brokers and of course also Admiral Markets offer something additional. It's called negative balance protection policy. Via that, you are protected also a professional client up to 50,000 British pounds, what is around about 70,000 euro. This is me. My name is Jens. Admiral Markets is a big international Forex and CFD broker, so my English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our usual scheme. On Monday, usually it's Jay's day. Jay is today unavailable, so we have a substitute. It's Jens Klatt. But the usual scheme is that. So on Monday it's Jay's day, on Tuesday it's Paul's day, on Wednesday it's Giancarlo's day, on Thursday it's Marco's day, and on Friday it's Dick's day. Our leading day traders live every trading day, every business day to the same time. And of course, if you'd like to trade Forex and CFDs, you will get many benefits only with us. DAX 30 or also Euro dollar, typical spread of just 0 at pips or points. And since last week, even Euro dollar a little bit better. 0.6 pips is now the typical spread. Euro dollar, 0.6 pips, typical spread without additional commission. Check it out on admiralmarkets.com or in your demo or real account. One World global offers. If you'd like to check out what we are doing globally in Chile office, in the European office, or in Australia office, you can do so. Also, here you find information on our global webpage. So, not Jay today. It will be Jens, but I don't have a slide for it. But maybe Jens prepared something. So, good morning, Jens. What's your view to the markets today?
Yes, hello and good morning also from my end, also from Berlin, Germany. And yes, as Jens C, in my case it's Jens K, this is me, already said, I'm here today and replacing Jay. I hope that I can deliver as good content as Jay usually presents. I know that he's from time to time also presents a view on the Commitment of Traders report, which we want to do today too, by the way. And the main reason for that is that there was something really interesting happening over the weekend, and it resulted, and there we have already here the chart on gold. It resulted in a break higher in gold, and I think there is several reasons to be really optimistic for gold right now. So what happened over the weekend was the following. Oh, I'm sorry, that's not the right one. Let's start with the chart here, and then I'll give you the link to Bloomberg in a few seconds. There was a meeting between U.S. President Trump and the Prime Minister of China, Xi Jinping. And they were obviously discussing about trade and the trade war. Bloomberg called it, they found kind of a truce here in this context. And the interesting thing about this is it's difficult to say whether this truce will be long-standing, I think is the right word for this, or if it will change within the next month then. But while we are looking here at the intraday chart, respectively real-time daily trading ideas, we can say that it at least gives us for today, but also for the upcoming days, probably weeks before Christmas, a very good guide in which direction markets could move here. And while we here have the chart in gold, that means implicitly already that there is some risk on right now in the equity markets being played, and that here, for example, the long side should be favored, even though in the DAX, and there's something we'll see in a few minutes here, has a significant gap up here, and not sure for today if the risk reward for long engagements is still so attractive, even though I'd be really, really careful with anti-cyclical short engagements based on the current bias we have in the market, and also from a chart technical perspective. But first of all, I'd like to have a look here at gold, and the reason for that is that gold and the Chinese yuan have a very high positive correlation to each other. So I haven't prepared a chart on dollar yuan right here, but this could be easily seen. If you overlay a gold chart with dollar yuan, you will see that if dollar yuan moves higher, usually you see you see gold going lower, and the other way around. Usually because dollar yuan going higher means nothing more than there's a devaluation in the Chinese yuan. So what we've seen now overnight, or with the first indications already yesterday on Saturday coming in from New Zealand, from Auckland here, FX indications, was that the yuan was 6 big figures higher at the opening price, which means we closed the week around 695 dollar yuan, and then we came in below 690, so 689 around. So, and with this in mind, and knowing about the positive correlation between gold and the Chinese yuan, it comes with no big surprise that the stronger Chinese yuan results in gold pushing higher. And not only that, but we already made it above a very, very significant resistance line here, the pre-weekly highs. And if we can now stabilize above this line, and by the way, let me just zoom into the chart. Probably this makes the picture a little clearer. So if we can now stabilize here above that, close probably above that level, further gains in the days to come are very, very likely. And in this context, I think it makes definitely sense to now, and here we have the economic calendar on the website from Admiral Markets, to have a look here at today's interesting events, news events. You can find this, by the way, by going via admiralmarkets.com, and then here via analytics and the traders, the Forex calendar. Traders block will be in a few seconds interesting. So first of all, you click on Forex calendar, and then you have every day, or for a week, for example, every news event which is interesting or of interest. And if you scroll down a little, you can see that here today at 3 p.m. London time, there we have the ISM manufacturing PMI. And here, something very interesting comes into play. Last week on Wednesday, Jay Powell, the current Fed chairman, said something which caught the attention of market participants. He said, and therefore now it makes sense to go over to the traders block. This is which you find here via analytics and traders block. So everything I present here can be seen, can be found here in written form in the traders block section on the website from Admiral Markets. So, and you can see already by the headlines that gold is a big topic. So gold here about to close the year very bullish, thanks to Fed Chair Powell. So obviously it has something to do with him, but also here, the ISM manufacturing today as a starting point for a volatile week for gold. So if you now click, for example, here on the bullish yearly close, this is the weekly forecast, you will see what Powell said last week and how it could affect the markets. So you can already find it in the paragraph around the US dollar, and there you can see Powell said rates are currently just below the neutral range, which is very surprising because on October 4th, around 1.5 months ago, 2 months ago, that was shortly, by the way, before US equity markets sold off sharply. So look at the chart, Dow Jones, S&P, DAX, for example, you can see that the October was deep red for equity markets. And one of the main drivers lower back then was that yields moved aggressively higher to the highest level. 10-year US T-notes, for example, yields pushed to the highest levels since 2011. And here the thing is that Powell said, the Fed said shortly before, that rates in the US are a long way below neutral, which means nothing more than there was an indication that there will be further rate hikes, that there are further rate hikes to be expected, and this is completely the opposite of what we heard here last week on Wednesday, when it was said it's just below that neutral level, because now it indicates that there's not so much room for further rate hikes anymore. And to make long things short, very simple, that means nothing more, in my opinion, than every data set from the US coming in the upcoming days. Today it's the manufacturing ISM. Then on Wednesday we have the ADP data, we have the non-manufacturing ISM. On Friday it's the non-farm payrolls. Every data set now, as a rule of thumb, can be seen as data comes in better than expected. This should usually result in the US dollar to make back some of the losses from last week, from Wednesday onwards, after the comments from Powell. Every data set coming in below expectation underlines the words from Powell and means that the US dollar should stay under pressure. And this means, on the other hand now, then when looking back at gold, that here gold has further room on the upside. So if ISM manufacturing today, for example, comes in below expectation, further gains are very likely. And there's a high chance, in my opinion, that gold will make it up to 1,244 USD per ounce. What's also very interesting is that we are now entering a very, very bullish seasonal pattern in gold, which has which played out over the last 20-25 years here. I haven't prepared any statistics on this, but you can believe me, it's around 75 to 80% that gold was stronger within the time span from mid-December till the beginning to mid-January. So with this in mind, and then looking at the calendar, we see, okay, we're not only from a technical side and also from a fundamental side, it's not only that we should expect further gains from this side, but it's probably also good reason to be very positive for gold from a seasonal perspective, based on this knowledge, what happened in the past and those gains which gold has seen. And in my opinion, the positive picture in gold stays positive as long as we can hold above 1,180 USD. If we now make it above 1,244 USD, if this momentum can be held here, then this level moves higher to 1,196 to 1,200 USD around. So this would be the next relative low, we call it, from a price action perspective. And this is then the next level to watch. But currently, we can say, as long as we trade above 1,180 USD, the picture for gold stays positive. So yeah, with this in mind, gold is obviously a very, very interesting market to watch. We also want to have a view here on the DAX and probably on the hourly chart first. And you can see here that we are now about to attack a very, very interesting region on the upside. It's 11,570 points. So that was the level to watch, by the way, here before. So this is where we closed the week. And with the price action from Friday, I was in fact very skeptical. I was thinking that we are probably about to see another leg lower, because I saw chances to be, let's say, low. It was a low probability that the DAX has a very good chance to see such a move higher. I didn't take into account that this meeting between Xi and Trump would deliver such a risk-on driver, in fact. But it did, and so the technical picture now completely changed. Why do I say that? Well, everything below the pre-weekly lows, we remember that we made here last week on the 27th. That was last week Tuesday, I think. Yes, it was last week on Tuesday. That was a push higher. It was, in fact, it was very a low volume, which was going hand in hand here with this move higher, because it was before the spot market, the Xetra DAX, opened. Nevertheless, it's a pre-weekly high in the future DAX in this case, and so from a technical perspective, relevant in my opinion. And so this level has now been cleared here, and is now giving us further chances to move higher here, up to not only 11,570 points, but I think more likely up to 11,670 to 700 points here. So this is the region of the November highs in this case. And even though this is now the hourly chart, there you can't really see the significance of this level. The daily chart clearly points out the significance because, as you can see here, if we can make it back above this level, 670 to 700, this is, by the way, also a former very strong support, which was then broken here in October after those bearish news, especially around rising yields, hit the market. This is now a very significant zone of resistance, because if we can make it back above that level, the picture is not brightening up significantly, but at least chances increase that we get to see, let's call it a solid close of the year. So with this in mind, chances are very, very high that now we'll at least see a push higher to this level, and then let's see whether we can make it above that level or not. The interesting thing, by the way, is, and this is something noteworthy here in this context, is over the weekend, or it was on Friday already, that Bush Sr., the U.S. president, the former U.S. president and father of George Bush Jr. here, the president of the United States, around the terror attacks around 9/11, passed away. And that's the reason why the U.S. decided to close markets on Wednesday. So it's let's call it a bank holiday. Yeah, I'm not sure whether we really should call it a holiday because someone passed away, but I think you get what I want to say. And so the thing is that with this in mind, with such a bank holiday in mind, it wouldn't come as a big surprise if markets start to thin out over the next hours. Probably U.S. equity markets, for example, can stabilize at the current elevated level. So have a look here, for example, in the Dow Jones in this case. By the way, let me just, oh, I'm sorry, that wasn't good. 1 second, let's do it that way. And again, here, there. So what you can see is, this is the Dow Jones on a daily basis. We now opened already here around the weekly pivot R1 in this case, as the first idea of where the market could trade to if we can stabilize above this so-called pivot point, the PP here. And so it wouldn't come as a surprise if we stabilize at this level and do not get to see a gap close, respectively, on the other hand, a more aggressive push higher up to the all-time highs, but stabilize at this level. Stabilize here also tomorrow, then don't get to see big price action into the close of tomorrow. Wednesday, markets are closed, and then from Thursday to Friday onwards, probably further momentum is taken on the upside. So it could be that the overall start into the week for equity markets is very, very calm. And with this in mind, this is also diminishing chances that the DAX in this case will keep on pushing aggressively higher. So we can see that we can stabilize at an elevated level, but I'm not very sure if we can now make it above the current daily highs, intraday highs in this case, 11,570. By the way, this is a 5-minute DAX chart, okay? I haven't written it now here, but just that you know what we're looking at currently. And so that means that probably there will be a drift higher. Probably this drift will bring us higher to 670 to 700, but I'm not very sure whether this will really happen till Monday, or if we probably have to wait to enter the second half of the week from Thursday then, that this is likely to happen. Nevertheless, it's important to note, the reason why I say that or I do that is very simple. I wouldn't be very happy to find myself in an aggressive short positioning currently. I could imagine the market really to stabilize at this current level and not try to close this gap here and go back towards the highs from last Friday, which can be found around 11,340 points in this case. So I'd be really, really careful with short engagements. If I had to trade the DAX, then I'd do it. I definitely favor long engagements. I definitely see the advantage to be on the long side. Nevertheless, based on this quite, let's call it extended a mode on the upside, I'd be careful in terms of the position size in this case, probably reduce the position size. And so finally, as usual, when I have the chance here to present my thoughts, I want to finish with an idea, trading setup for EURJPY. It's very, very interesting what's happening currently. So EURJPY, we are trading it on a, let's call it an automated way. So we define the range between 3 a.m. to 10 a.m. German time in this case. We use this purple line, the EMA 11, as our trend filter. We say every breakout on the upside is traded if we trade above this purple line. Every break on the downside is traded if we break or trade below this purple line. And currently, the interesting thing is that if you zoom into the chart, you can see there's no trade open so far. And the reason for that is that the last candle here closed slightly above, but still above from a technical side, above this purple line. So what we now want to do is we wait till the candle here closes, and then we will most likely, if we don't push back above this purple line, enter a short setup here in this case. So that means we are, first of all, let me just do it that way. I'll open a new Word document here. Take some time, but 1 second, please. So there we have it. And then, oh, that's the wrong one. This one here. There we go. And then, so first of all, define range. We call it the Asia range. So we take the high and low of this time span, 3 a.m. to 10. These two blue lines here, the low of this candle is 128.77. 128.77. And then we have on the upside here, this candle, it's 129.14. So this is giving us a range of 37 pips. And then we said, okay, do we trade above or below this purple line? Currently, or so far, we entered a long setup because this candle here, the last hourly close, shortly before we started this webinar, closed slightly above here, this purple line. You have to zoom in really really strong to see that, but just believe me, it was a buy stop. Now chances increase that there will be a sell stop order in this case, which there's no trade being triggered because the buy stop is defined on an hourly chart, which means we have to wait till this candle closes to then define or switch the setup in this case. So chances are very high that if we close below this purple line, we have a sell stop, which means we enter the market at 128.77, and then we have our stop being placed at the high of this range, which is 29.14. There's a risk of 37 pips. And now the interesting thing of the setup is it has a predefined target, which is, and therefore we call this 1R, which is, or which will be set, the target will be set at 1.7R in this case. So we have to multiply 37 pips with 1.7 and we get 63. So let's do it that way around. And then we say, okay, 63, we have 77 as our entry point. So our limit will be placed at 128.6314. There we go. So, and this is exactly what we will enter right here with the mini terminal. So we have the sell stop here, and we have the price 77. So we want to risk 0.8% of our equity. We have a price which is 128.77. I'm sorry, for the stop loss, it's 129.4. And then we have our take profit, fixed price 2 at 128.4. And now, this is very interesting, by the way, with the equity of 0.8%. Have a look here. We place the order. The great thing about this is the order, which we just formulated here, is now entered. And not only that, but have a look here at the volume we plan to trade, 0.27. And the question you might have is, why is it 0.27? It's because with this size and the risk here in pips, you now risk 0.8% of your trading capital you have here. So the equity in this case. So, but it's it equals the balance in this case because we do not have any other positions out there. So one question from Nigel is: the purple line, is this the EMA 11? Yes, it's the EMA 11 in this case. Yeah, and so that's it from my end. So nothing more to add.
I can add, tomorrow is another day. We have 5 days a week, 5 different traders. So if you like to join us tomorrow again, same time, same place. And if you'd like to see and watch that again, what you just saw right now, in a couple of hours, it will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Thanks to Jens. Tomorrow, a new day trader, 5 days a week, 5 different traders. Greetings from Berlin office. Good start into the week. Bye-bye.